Hi, everyone. Welcome to the official ESOP Radio podcast. We're at episode 7 of the ESOP Boot Camp. Today, we're explaining how an ESOP transaction actually works. Hope everyone's doing well. Let's go ahead and dive in. So we've gotten to the exciting place of actually making this whole ESOP happen. We've figured out your value range, how much you want to sell to the ESOP, figured out the financing piece, and the overall structure of the deal. If you're building a house, we've created the blueprints, the design. Now we're ready to interview contractors and make this thing happen. So that's where we're at in this process. Today's episode, you'll learn how the whole process works. The question you might have is, okay, I've been working with my ESOP advisor / quarterback. So who are the other players? The other players are ESOP Trustee, who is the fiduciary of the ESOP, their counsel. Some trustees out there have their own in-house counsel, some don't, and also their appraiser. So big picture, there's going to be 3 parties representing the ESOP trust, and they are sitting across the table from us in negotiations. Their whole job is to ensure that the trustee pays no more than fair market value for the company stock that the ESOP's acquiring, and to make sure that the ESOP is operating under all the rules, Department of Labor, IRS, ERISA for you code heads, and so on. So how is the trustee team hired? And that's our role as the quarterback. Your ESOP quarterback is going to line up appropriate ESOP trustee members according to geography, expertise, size. Larger companies go for the institutionals, think large banks, et cetera, that have their own trust departments. Smaller to lower and mid-sized companies, maybe they're looking at more sophisticated independent trustees and so on. There's a whole marketplace out there. Our job as the quarterback is to line up appropriate people who are the right fit and also culture fit, personality, expertise, and so on to make sure that we're going to get to a good deal. Once you and your board have decided which trustee team you want to go with, they get engaged and they start due diligence. In the context of Menke, since we've done already all the initial ESOP fit analysis, we already have a data room set up. So guess what? That trustee team gets access to that data room. Likely they'll want additional information as well. So your CFO, often through these transaction processes, the CFOs do a lot of heavy lifting. We'll be uploading, current financials, legal documents, and so on. If you have existing counsel, general counsel, they do play a role in this as well. Due diligence takes place. That can last anywhere from 4 to 8 weeks to longer, depending on timing and availability of data and so on. Once the trustees team is ready to negotiate, then your ESOP advisor kicks off negotiations, and that's when the whole thing starts. So on your side, you've sketched out, working with your ESOP quarterback, the value range. ESOP quarterback has also raised financing. Now we need to negotiate the deal and make it real. Negotiations take place. Usually there's several turns of the term sheet, so you have to be patient there. It's much different than, say, you're negotiating a contract with a client or a new customer. Sometimes there's numerous turns back and forth, such as price, overall terms, quantitative components, interest rates, qualitative. What does the governance look like? Once we get to an accept place that is acceptable to you as a seller and the trustee representing the trust, then we can move forward with close. And what happens in close? I'll give an example. $50 million transaction, let's assume that we negotiated that as the final price, and we raised $20 million in bank financing. The bank comes in and closes and funds $20 million. And what about that other $30 million? Well, you're carrying that as a seller note in this example. At close, bank funds $20 million to the company funds $20 million to the ESOP, and then the ESOP's cutting you a check for $20. That gives you liquidity for reinvestment if you're doing the tax deferral that we talked about earlier, or you have the cash to do whatever you want. And then the $30 million is that seller note piece there that we talked about in an earlier episode. That is it in a nutshell. There's more to this, but I hope through this episode that you've learned how it works. We always tell people that it can be a bit of a different negotiation because in essence, you and your board are hiring your counterparty. They're sitting across the table. We're negotiating back and forth. We're helping you. Trustees on the other side with their team. But then once we get to price and terms, everyone is on the same page, sitting on the same side as well. Have an awesome day. Thank you for joining us. Reach out to us on LinkedIn. I'm Trevor Gilmore, CEO of Menke. You can check out our Menke LinkedIn page or website. We have information about our ESOP fit analysis. That's our first step. Also, a lot of client case studies and ESOP news. Join us for episode 8, What Happens After the ESOP Transaction. Take care, everyone.